I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market chopped upward in this holiday-shortened week as bargain hunters stepped in after the indexes got crushed for the previous 2 weeks. Monday, the market was closed for the holiday, and Tuesday, we saw big gains as bargain hunting came in, and the S&P 500 pre-opening was up a quick 100 points. Wednesday, pre-market gave back most of those gains, but when Powell started his 2-day testimony in front of Congress, buyers came back in as he indicated there was strength in the economy, though also indicated that that meant they could raise rates. As traders digested the comments and the prospects for a recession, which seemingly are increasing, the big losses that turned into nice gains, suddenly there was late selling and the market ended mixed. Thursday was another choppy day, with Powell's second day in the Q&A, with questions loaded again with their political agenda, and Powell, who I'm not a great fan of, and you all know that, did a good job for 2 days swatting back the questions that were about things that the Fed has no business being involved in. Indexes were up nicely, then moved down sharply to negative and rallied again and finished around flat. So pretty much of another upward choppy movement that we've been seeing in these markets. But Friday, the buyers really started to come back in. As investors were reading overnight, other analysts talking about the fact that the Fed hiking cycle may very well be, they could see the end of it. So the market was up a lot, about 85 points. Then it stalled as news came out that the Supreme Court had overturned Roe v. Wade, but then the buyers seemingly came back in. The issues regarding these forecasts that they could see the end of this cycle where the Fed raises rates is that they're discussing the recession and the next Fed easing into late 23 and into 24, but that's not happening. This Fed needs its credibility back, and it's going to keep raising rates as they projected up into the 3.5% area or maybe higher, and they're probably going to stay there for a long period of time. They need to get normalized and hold on to that and then take a peek at what happens in the economy. It'll take an economic disaster to get the Fed into an easing cycle. And that's not likely going to happen if you just have a slowdown or a mild recession. While the bubble has popped and there was a big decline in the stock market, well, that's not enough, as we can see, and the Fed will sacrifice the stock market. They are indicating that, and they're raising strongly and cutting their balance sheet at the time when stock indexes are down between 24 and 34% from their peaks. And they need to correct their obvious errors. It will make for big volatility, we think, throughout the rest of 22 and into 23 and maybe later. But through our analysis, which we were looking for this big decline in the stock market, things are changing. And don't hear that as me turning bullish at all, it's just that we see different things in the analysis that are important to bring to you. And the one tell I think that's very important, that's my poker language, is Dr. Copper. I'm going to show you a couple of charts that I think are important, a weekly copper chart, and I'm going to show you the cycle analysis around that with its perfect cyclical harmonics. You'll get an idea what that means. And then I'm going to show you Dr. Copper versus 10-year yields that I think has very important information in there. Let's take a look here as we switch over to the copper chart. Now, for those of you that are brand new, first time seeing our analysis, we do cycle analysis, and it's made up of three major components. First of all, the cycle analysis, which is represented here on the bottom by cycle brackets, and those are simply a drawing tool. They give us an idea of the energetic motion in the market, just like the waves in the ocean. So it's motion of the ocean, a lot like what we do here in this analysis. These are made up of dominant cycles, that's the bigger one right in here, and they have a specific period, which is the length between lows. And then there's also a minor cycle here. And you can see each of these dominant cycles, how the ideal situation would turn out. But when there's an upward bias, in other words, upward momentum, as you can see here on our proprietary reversal scout, then it drives the market to the upside. So you had a full bullish cycle right in here, very bullish, as it translated way on the right side. We call this a bullish right-hand translation. And the same thing happened right in here. You can see that. Now this cycle right in here was a bit different in these clear harmonics that I'm showing you, and that is that it gave up about 97% of that whole rally in that cycle. And when that happens, it's a warning that something is changing. Now this one took more than a year to put this top in, and it was a double top, the peak right over here and a peak right over here that failed into these projection areas. Those blue areas are our projections, and you can see how they beautifully got into those levels. And then you could see this next cycle right in here. So I'm going to zoom in right now so you can get an idea of where we are right now in the copper market. And that is that this dominant cycle that you can see here was made up of these two minor cycles. This dominant cycle right in here is not complete. The first minor cycle broke the low, in other words, where it started. That's the first cycle that's done that in all of these years that I'm showing you. Then that says that the next rally will likely fail in the sell zone. And the fact that it broke underneath then made us more negative. You can see our reversal scout right in here turning negative, and it's been moving down ever since. Now, there is a synchronicity going on in here that comes out to about August 1st, where the weekly pattern and the daily patterns align. I'm not going to show you the daily, but they do align out there, and that says that right now here we are about 5 or 6 weeks from that time frame where copper is likely to keep going to the downside. But because of this negative occurrence right in here, and breaking what was this upward channel that it had been in for so long, it suggests that this next cycle out over here will have a good rally through these rising phases, but then fail and take out whatever low it makes in here, or at least test it. So what that means is that you get a rally out over here, out in towards the fall, maybe October, maybe even into November, and then the copper market weakens again. So you can see, when I look at this, you can extrapolate what might be happening in the stock market when that happens, similar occurrence. But this really points to more weakness in the copper market as you get out into this period of let's just call it the last week of July to about the middle of August, that there is this downside risk in copper, and that's a big tell. It says that the Fed actions of getting their interest rates up to 3.5%. Well, the market is already thinking they have that priced in, and they actually might. So it means a lot, and you want to get some idea about what it means when how copper acts regarding yields and what that can tell us. We'll take a look at this chart. This is a comparative chart going back about over 9 years, looking at Dr. Copper versus the 10-year yields. This is TNX, the 10-year yields I'm highlighting right in here, as you can see, and this is copper on the bottom right here. Look at the way these trace each other almost perfectly in here. And what's going on right now, of course, is that the copper market is turned down sharply, And we have talked, if you're a member, level 2, 3, and 4, you've seen our Future Speak video, and we've been talking about the fact that we think yields have peaked, and that there's going to be a period where there has downward movement in yields, maybe some upward movement in bonds, and that while they might be range bound, that they're likely to start coming down. And you can see in here the yields are just starting to come down right over here. And based on what we said in copper, with it likely moving down out into early August, well, we can see the yields coming down in here pretty significantly. If you extrapolate out that we're talking about like 3 to 6 weeks right now, besides the fact that the copper market may be really weak, well out for many months after some attempted rally, this means that yields are peaking. It means that, using correlations as we know them, the dollar is peaking. That means the euro is bottoming. Now, these are all trade ideas that are really popping out when you look at this. And what we've been talking about since the beginning of the year was that the story for gold and silver was going to be in the second half of the year. And we believe gold and silver are bottoming. Now, again, that's in the next 3 to 6 weeks. It doesn't mean you buy gold and silver right now. They're in a particular time period where there could be a downside capitulation, and silver is getting sold very hard. And stocks are likely bottoming, but again, we think that the stock market, and I'll show you that at the end of the show, is very likely to fail in the area that it's rallying up to now, and then come down into the sometime into the July timeframe. That's in alignment with this, what we expect to happen in the copper market. So you can see in here what we're extrapolating out of here is there's a lot of potential changes in markets when we're looking at this. And yes, that might mean that basically for now, out into July, whatever that low is in the stock market, maybe the worst of the decline has been seen, and then the market kind of takes out those lows by a little bit. So this is important analysis when we look at this, and I wanted to show that to you, looking at these correlations, which are just astounding, between the copper market and yields. As you can see, the very likelihood that yields are now peaking based on what Dr. Copper is doing, and then this cyclical pattern in here that suggests that copper will be moving down here into the early part of August, which may very well be a tell for the stock market also, in that it's not likely to bottom until some similar time over there. There are great trades potentially coming here in metals, bonds, currencies, and we'll show you those as they set up, and you need to be, of course, to see Future Speak, a level 2 member, and to get all of our analysis on these different commodities, level 3 and 4 members, to get a good peek at all of our chart work. So please do consider becoming a member. Wanted to show you that. I think it was really important analysis there. And you get a sense that, well, things in the markets very well may be changing. For the markets this week, the major stock index is now up over 6%. The 30 years are down close to 2 points. 10-year yields, the 30 years up close to 2 points, and the 10-year yields down about 16 basis points. The gold market down $15 or so. The silver market about 65 cents to the downside. And all of what I just told you is really the recession factor being put into the market. At the same time, the dollar, which we believe is peaking in that process right now, down about 0.6%, and the oil market is small to the downside. And you're going to see some great analysis on the oil market coming up from Katie. Actually, coming up in the show will be some great lessons on cycle analysis as Katie dives into the oil market, looking at the weekly and daily charts. Matt is going to show you a day trader's roadmap, or he's going to really give you a good peek at our daily snapshot on the indexes. And I'm going to get into that stock market analysis and show you what I think is some great stuff on the SPY. So that is the opening, and hope that you just love that, what you just saw about the copper market and what that potentially means. please go to askSlim.com and explore that site. Look all around and share it with people you know that are interested in the markets. If you're new, become a free member, or you can take advantage of some of the specials that we have available by writing to Matt at askSlim.com. On YouTube, please do subscribe to our channel. Click that notification bell. Give it that thumbs up because you love this video. And on Twitter, follow us at askSlim. As I said, for all of our membership information and questions on our huge offerings of education and analysis, which our really large membership really loves, we get so many great comments, please do write at Matt at askSlim.com. This is multiple time frame analysis on oil. Katie is going to look at the /CL market, that's light crude, and she's sourcing our cycle low timing tracker for indications of a potential trade that's coming up in here, and she's going to show you that analysis that I think is simply superb, looking at both weekly and daily charts. And she's going to show you how this analysis really helps you with getting higher odds of successful trade location and entry, especially in the oil market.
Hi, I'm Katie with askSlim. The cycle low timing tracker that you're seeing on the screen is a tool that we developed recently for our level 3 and 4 members. It helps identify opportunities both coming into cycle bottoms and coming out of cycle bottoms that may be setting up in the symbols on our focus list. We use this tool in conjunction with looking at the chart analysis to determine the type of opportunity. The symbol we're going to look at today is /CL, that's crude oil futures, found here in the cycle timing box for the daily time frame. Now, crude oil had a big drop last week, so let's go and take a look at the charts and see what kind of opportunity might be there. This is a 5-year weekly chart of crude oil futures. We have a very large dominant cycle that is divided into minor thirds. If I zoom out on the chart, you can see the consistency of those cycles. I'll mark out the major cycles for you, and the minor cycles are already outlined with blue lines. Okay, let's zoom back in and see where we are now. This previous major cycle bottomed here last summer. See this yellow oval and the note that says period of downside risk? Often when we have a major dominant cycle declining and pushing down together with a minor cycle doing the same thing, we can get really significant downside moves like what happened back here if I scroll back so you can see the cycle before that. Now, this one did not give us such a significant downside move, so that was telling us something about the strength in the market. So after that cycle low formed, we got an upturn with momentum that you can see right here with our proprietary momentum indicator, the reversal scout, turning green. We became concerned here when the reversal scout turned negative again so early in the cycle, but we had a retest of the low and then took off on the upside with another momentum turn. We peaked at 130.5 and had a sell-off to complete this first minor third cycle. We found support at about the 50% retracement of the move from here to here. The second minor third cycle had this advance in its rising phase and stalled out at the 78.6% fib retracement of the move from here to here. Last week, we had a sell-off that continued into this week, and momentum has turned negative. So that, coupled with the fact that we could not retest or take out that high from the first minor cycle, gives us a high probability that 130.5 mark is the high price for this entire dominant cycle. Now, this second minor half cycle is due to bottom later in the summer. That time period is shown with these blue vertical dashed lines representing a few weeks around the ideal cycle low. It's from July 18th to August 26th. So with negative momentum now and going into the declining phase towards this cycle bottoming window, we don't believe we'll be able to retest that major peak at 130.5, and we don't believe we'll be able to retest the high of this minor cycle either at 123.68. As far as projections go, we have one here at the 78.6% fib of this minor cycle. That's at about 99.5. Below that, we have a major 50% fib at 96.12, the recent cycle low around 93, and a major 61.8% fib retracement at about $88, but we aren't projecting down that low. Let's take a quick look at the daily chart. Here we have dominant cycles broken into two minor half cycles, and we are currently in the cycle bottoming window for this cycle, once again shown with these blue vertical dashed lines, and that is why crude oil is found on the cycle low timing tracker. We have negative momentum here too, as shown with the reversal scout again, as well as with the slim ribbon, which colors the candles green, gray, or red, depending on the momentum conditions. So what we're expecting is for crude oil to make a cycle bottom in here and get a bounce up into this resistance zone between about 110 and 115.30. With negative momentum and a declining phase on the weekly chart, the probabilities favor that it will stall in this resistance zone, possibly up at the 78.6% fib around 119 if it wants to show off a little. Now, if you want to trade the long side in here, that would be your small window of opportunity and your upside targets. But once we get into this resistance zone, the short side is preferred here because once we begin this next daily cycle, it ends out here in August, which corresponds to the timing window from the weekly chart when we expected that second minor third cycle to make its bottom. Once the cycle begins right here, crude oil will also show up in the in sync box on the cycle low timing tracker to reflect that situation and call our members' attention to the anticipated weakness. To learn more about the cycle low timing tracker and our other tools and services, come visit us at askSlim.com.
I love that, Katie. You do such great work, and I sure hope that the people that are watching this decide to, if they're not a member, become a member so they can learn more and more about this analytical style. This is Matt showing you a day trader's roadmap. Every single day he does fantastic work on the indexes and sends out the daily snapshot, and you can see our live charts on the ChartStreams, and he's going to show that to you right now.
Hello, fellow traders and fans of technical analysis. This is Matt with askSlim. Okay, in this brief segment, I'm going to highlight one of our most popular Level 2 services, the askSlim SIR Intraday Daily Snapshot. It's built to be a day trader's roadmap. It's published pre-market each trading session. It's live streamed throughout the trading day, and it delivers important technical insights into directional bias with our primary intraday momentum indicator, the reversal scout, which you see here as this band that changes from green, which is positive, to then purple when it is negative. We identify key support and resistance areas, which are these pink areas here, and then that dark red area. And then most importantly, we have our upside and downside acceleration zones where we try to capture the biggest impulses of the day. And that is these areas here. So you can see here, this is from Wednesday, this past Wednesday, the S&P came right through our acceleration zone. Again, these are published pre-market. Same with the NDX, the NASDAQ 100. So we have the three cash indexes that we do our analysis on in the morning. And again, this is published pre-market and it is live streamed throughout the day. Okay, now I'm going to wrap up this segment by showing you how easy it is to access the live stream. Click from your dashboard, you click on the SIR Intraday ChartStream broadcast. Then you click on the Zoom link. You can plug in your askSlim email. Join the webinar and away you go, and there we have it. That is today's live stream with the grid that was published this morning. Our level 4 members, if your level 4 actually gets their hands on the raw grid, the levels 2, 3, and 4 can access the live stream as long as they have an internet connection from anywhere. So you can access it via your phone, a laptop, a tablet, or your desktop. If you're interested in level 2 or the SIR intraday grid and live stream, reach out to Matt at askSlim.com for special offers.
Wow, Matt, that is great. You gave a great peek of today's live chart. You could see all that stuff, all those indexes moving up through those yellow zones, which are acceleration zones, and really had a good sense for market moving up in that strong way. And also, what I saw was that they were in red zones, meaning that somewhere up around the S&P 500 up in the high 80s or 90s looked like a pretty good spot for it to be resting in there. So great stuff. Thanks for doing that. Really good work every single day. This is the stock market analysis for today, June 24th. We're going to look at the SPY. Last week we said the market's going to rally. We expected a relief rally, and the things we look at were lining up for that. And we said that we're going to show you at what point we think they'll fail from again, and we still think the risks remain high in the stock market. If you did not watch the beginning of this show, the full show, go back. To the beginning of that video, in the opening, we discussed copper, or the importance of understanding Dr. Copper and the ramifications for the stock market and many other markets. So if you're interested in seeing how the aspects of the movement in copper really amazingly affects interest rates in other markets, I really want you to go back, because many people are watching just this clip. And it's important to go back to the market week show at the beginning and watch that analysis. So please do that. It's in the opening section. All right, so we're going to look at the SPI weekly. And we're going to look at the ideal map that I have shown you before. And we're going to look at the actual movement, cyclical patterns, and what the range of price is that we believe that this rally that we're seeing will fail. And we're getting up into that right now, but there is still some room. Let's take a look as we switch over from that copper chart that we were just talking about. And again, go to the beginning of the show and you'll see all the explanation of that to this chart right over here, which is the S&P 500. Now, what I have on here is the actual cyclical patterns as they resolved in here in this giant upside move. This is the big bubble blown up by the government and the Fed, pouring all that money in. And over here is essentially the map of how those cycles resolved and where we are on the map right now. We're going to zoom in right into this area right here so you can see both the projections, the map, and where we think this market is going right now and stalling from. So this is the cycle analysis in here. These are the minor cycles right in here. They're running about 9 weeks. This is the dominant cycle right in here running about 27 weeks. That's on average. This is the cycle bracket. This is not the cycle. So many people look at this and say, but your cycles say this or they say that. Like this says it's going up, but then the market is going down. So they say it's wrong. Well, it's not wrong. This went up until it failed. And now all of this period right in here is where it's likely to keep moving to the downside based on all of these patterns. Here is your first minor cycle in here. And you can see what happens is it rallied, hit resistance, and then broke. And broke that important low, and that says the highest probability is that this market will move down all the way into the late summer, early fall, September, October, as these two lines are pointing to that range of time where the next trough is due. So this minor cycle rally that you saw right in here, and this UR here used to be over here, that hit that sell zone right over there and then moved down. Now, this is only 4 weeks off of that low, and they last approximately 9 weeks. So here we are, 4 weeks on the bottom, the 5th week here. It's pretty likely that this low here at 362 approximately will get tested or broken out into July. Now, if you looked at our copper analysis, of which there's been a lot of similarities, this also points out into July. This is your sell zone right over here. What that's made up of is basically comes off the daily chart from the minor peak to the minor bottom. And this resistance area, the sell zone, is 383, which it's now moved above to about 397 right there. So there still is some upside room in this market. And then these are only the minor resistances right over here. Were it to be able to do better than that, and there is some probability if that's the case, then you get up here to the major 38%, which isn't very far either, and that is about 407. Major 50 is 421. This is very unlikely that the rally gets up into those levels. So we're looking for the highest probabilities of failure right here. On top of that, we have this range through late 2022, which we really think is going to be in that area right over there. It's about 398 to 407. That's this area right in here. There's a potential for it to get through there by a little bit. And also on the downside right over here, that's 350 down to about 340, which would be pretty hard to get down to. So we're really looking for that range right now. We'll just call it around 400 or a little more, around 350 or a little less in this period right in here, where this cycle completes, this cycle rally, then it moves down again, with a target down over here of about 335, potentially 320 that I show on some of the other charts, with a potential stopping it here around 352. So that's, it shows that the majority of this big decline in the market's probably over with, as there are multiple forces that are fighting each other. Recession, lower earnings, a tighter Fed, and a margin squeeze in companies, and certainly lower earnings, and maybe an earnings recession that we're going to see, all fighting bargain hunting on the downside, and the perception that all the Fed hikes are priced in. So all of that has this, what I think is a range trading that's going to go on in here. Those people that think that the market, they're looking for this to end and then move up and explode up to new highs. I've read some analysts talking about that. I would rate the probability of that about 3%. I think the probability is highest, more than 60%, that it fails in this area of the resistance zone. Make it 2-to-1 odds, and then comes down again. And if it's able to get up into here, getting beyond those resistances is maybe only about 15%. So I based on all of those odds are based on all of the studies I've done. Remember, cycle analysis for the last 48 years, and I can tell you that it works more than it doesn't, or my analysis, my interpretation of the cyclical patterns are correct more than they are incorrect. And the highest probability right now is that this market will try a little bit more on the upside, but then coming out here to July, have one more sell-off right in there, and then this rally out in the summer, and potentially July and August, late July through early September, where the market does look better again, maybe gets up to 407, maybe gets up to 421. And then turns down again for that last big area. These yellow areas right in here that you see here, those are areas where there's a nesting going on. In other words, all the cycles are pushing to the downside, and that gives you the biggest declines, as you can see in each of those yellow zones. And right now we're in a period right in here where that yellow zone is not going to come into play until sometime in August. So I think lots of chop in here, and potentially some very good trading in the S&P 500. Again, where are you right now? Well, this first cycle right in here broke to a lower low. That says this next cycle will fail as it did, and now you're right in this area right in here. Essentially, you're rallying against the downtrend and likely to fail and move down into this July time frame. it would have to get up above the 78.6% of this decline, which I don't really have in here. It's above 407 for us to begin to question that and whether or not the market is in better shape. We'll see if that happens. Again, I make that extremely low odds and a pretty good probability that this minor sell zone that you see there is going to stop this rally, and then the markets will be moving down again. We are always using some of the evidence, and right in here you can see where the reversal scout turned negative, that red arrow pointing there, and it remains negative. When it rallies up through a negative condition and hits sell zones, the odds are high it's going to move down again. That's exactly what's going on right over here, as it's moving up to a sell zone in a condition of negative momentum, in a condition of negative cycle action, and the highest probability is that it will fail in this zone and move to the downside. I hope that was really clear to you and great information. The relief rally is here, but the risks remain high. Please do remember to go to our website and explore around there. If you're new, become a free member or write to us for some specials. And on YouTube, subscribe to our channel and click that notification bell. You know when we put up videos. Give us a thumbs up, like this video. Watch our member videos in the playlists and past shows, and you'll get a good sense for the type of analysis we bring and why we have a huge amount of members that count on the analysis that our amazing team, 4 analysts that we have, and a great support team, and we bring this information to you every single day. On Twitter, follow us at askSlim, and for those specials, any question you have on what we do, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit and